to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. This is our free video. We'll probably be doing this for another week or so. And we may shift things up here. I'm going to be taking a bit of a break. So if anything, it might be interesting to get your people's feedback, maybe even come on the site. If after a week or so, you're completely jonesing for the Beamish and you need your daily dose of him, let us know. We really need the feedback from all of you as to what direction we need to take this going forward, and of course to make this economically viable. So just an FYI up on that, today is Wednesday, and I think I'll be heading off to vacation land at the end of the week, and you've got a couple weeks to try and figure out there's somebody's already saying I need my daily dose. Well, we got to figure out. I did actually see a bunch of suggestions from all of you, various different ways that we could justify doing this. I just understand, unfortunately, the internet now has become a very expensive place to do these videos correctly and all that. So just understand. We're sort of humming and hawing given the new sort of economic realities of the world. Anyway, let's see whether I can give you a good little dose of value here this morning. Hopefully help you see the market a little clearer. Who knows? As the breadth has indicated for a while now, the market itself has not been very happy. Breadth wise, and actually interestingly enough, we're actually now starting to get, and this is where I think that this breadth indicator really shines, is we're actually now starting to get that medium term and short term oversold condition, and this is sort of, think of this as like they're throwing the baby out with the bathwater. Oh, wait a minute. Go get the baby. We want the baby, we just don't want the dirty bathwater. So also too, I thought it was super cool. We have a stock pickers club that we meet every Tuesday, and we just had a big whack of students all just complete the level 3 program. So they're basically getting ready for their final exams, but they've got an open invite, of course, to join the program. One of the conversations that we had last night, and keep in mind, I like to try and have this club like with actually educated market participants. So I think we have the room as like, if you're a student in the education program, it can be read only. But we do have the stock pickers club meeting, and actually we have a core group that are very, very good at what they do. So this was one of the conversations that we had last night, and I actually like this thinking, where we just went through sort of a little mini crisis there. This image right here, this is the decennial report, or basically, given what year we're in, what's sort of the average performance of years that end in fours, on your typical 10-year economic economic cycle. Interesting, we had that conversation about the broiler chicken show the other day, about all the various cycles. This happens to be one of the key cycles, the economic cycle, and it's about 10 years in duration. And interestingly enough, year in, year out, decade in, decade out, ironically enough, we actually act very, very similarly from one decade to the next. But the people seem to forget, like 10 years later, they're like, oh yeah, I remember that way back when. So this actually is one of Warren Buffett's favorite tools. Of course, the guy's old as dirt, so he's had a few decades to learn this. This is one of my favorite studies because it's so simplistic, and yet it's incredibly accurate. Like we teach in our education program, and actually, this would be interesting feedback. If you can answer this, then that's good. That means that you've been listening to me. If you can't, then it means maybe you need to get into this school. But when are recessions usually supposed to happen? Right, years that end in what's, and what's. Yeah, it's basically the same premise that usually decade in, decade out, we do very similar behavior. So this is the kind of conversation that I think we're going to have in the after party. We went through a lot of really cool studies last night in the SOF club meeting, and also including two. And I thought this was really, really helpful. We took a really good look at where we are in the economy. What are the economic messages sending? And by definition, what parts of the market should we see outperforming? Sector rotation, which is a part of our level 3 education program. And very insightful. And one of the sectors that should do well in this particular environment is actually doing very well right now. So not really a big surprise. So lots of fun that we're going to look at the after party. I mean, circling back here, what am I supposed to be talking about with you guys here today? You see in the lower corner, we'll take a look at the breadth. We'll look at the general econs. Not too many econs that came out today. We did have EIA report. Unfortunately, I had actually a fire in my building last night, believe it or not, an actual real fire. So the people in the building, this is a 20-story or 25-story building that I'm in here. We were all out on the sidewalk for about 2 or 3 hours last night. It wasn't a lot of fun. So I'm not really with it with regard to things like day trading and stuff today. So more of a spectator. In fact, I didn't even start my regular routine until about 8 a.m. my time, 7:45 my time, because I was just a mess here. So anyway, I have an excuse for slacking off a little bit here today. We'll talk a little bit about EIA, consumer credit coming out later on today, but really not a hell of a lot on the econ side. We did have mortgage rates tick down. And if anything, one part of the market that I think caught a lot of attention recently, especially on social media, is actually firming up now. So I don't really see a lot of disasters out of the US economy right now. And my thesis all along here has been the US economy is perfectly fine. Frankly speaking, I don't even think there is justification for the Fed to cut interest rates here. But of course, the market and, this debt laden society of, we're basically debt junkies, crack addicts for lower interest rates. And of course, when interest rates have to firm up because of inflation, nobody likes that. So anyway, I think there's a lot of politics involved in my country. Oh my goodness. We don't necessarily need to go down that road. You all know what I think about this silly country here. And in fact, somebody even on the in the lounge said today, well, that fire in your building, I wonder if that's maybe God sending you a message to get the hell out of that place. Anyway, I'm gonna see where I end up on vacation. I think I'm just gonna hop in the car and just go, just see where the hell the wind blows me. Anyway, so we can talk a little bit about econs. The topic specifically today, you notice mysteriously out of nowhere, the markets are all sort of ratcheting right back up top. And so the question is, if the economy was so bad and we're all heading over the cliff, like why on earth would the economy just rebound so instantly? And is the stock market really a barometer for the economy? I don't know. A lot recently we've heard Jerry saying things like, he's not really too concerned about the stock market. It's doing its own thing and blah, blah, blah. So yet again, market jumped up today. Looks like we're running out of steam here, though. And actually, Russell 2000 probably a good example of like the broader market. Keep in mind that's 2,000 stocks. So why would the market just all of a sudden just crank right back up there? Actually, where's the best place to show you this? Well, actually, we can show you on this image here. The S&P 500 here. This is this spider. I mean, basically, I mean, look at this. One thing that you got to be concerned about are all these price gaps. So you often see price gaps on these kind of ETF charts when overseas activities is actually what's driving the market. And I have a feeling that's what all of this is about. It doesn't really have anything to do with us here in North America. It has everything to do with Japan and what the hell's going on over there. If we just look at, I always get this wrong. Well, maybe. Yeah, there we are. SGX. I don't know whether that's where I want to go. Of course, caught me with my pants down. I'm always so slow at this stuff. Where is the US? Maybe we look at, yeah, under futures. That's interesting. Must have done something wrong here. Okay, well, what do I want to do here? Let's just quickly. I thought it was NK. Could be a mistake. And anyway, there's this. Let's see. So, I mean, there's the problem. This doesn't really have anything to do with the US. This has everything to do. And keep in mind, this is a pretty damn big move. And this, unfortunately, I think is going to be the hallmark of sort of our economy here going forward. I mean, the Japanese stock market was down 26, 27% in what the period of like 2-3 weeks. Ay, caramba. And then, of course, why are we bouncing right now? And I think the reason why we're bouncing is because a governor of the Bank of Japan came out and said, "Oh no, yeah, everybody's talking about how we're starting to raise interest rates again, and how we're getting serious about inflation, and we're going to sort of normalize everything over here in Japan." And then instantly yesterday, he came out with a comment. This was Bank of Japan deputy governors, and my apologies, I'm just going to butcher this names. I'm so sorry. We'll just call him Uchida. Hopefully, Uchida. I pronounced that somewhat close. Basically said that they're not going to raise rates anymore here until the market is stabilized here, because this, I think, it caught the entire market, and frankly speaking, I would even say the entire world off guard. I don't think that even the people in charge of the Bank of Japan realize how big this carry trade actually has turned out to be. And keep in mind, this trend has basically gone on for, better part of 20 years. It's been a very, very long time since Japanese have had any sort of sizable interest charged on a short-term borrowing. So I have a feeling if there is a 300-pound gorilla sitting in the corner that everybody should be concerned about, it is the size of this carry trade. And you might even argue that a huge portion of this entire stock market rally that you've seen off of those 2020 21 lows, a huge portion of this might just be directly attributable to this carry trade. So I think that the Japanese, the government themselves went, holy Shiite Muslim, or something along those lines. And sort of the backside of that was, slow down, slow down, slow down, slow down. And they come out, and it's a very typical sort of politician sort of response, very slow, very, and probably very canned response. We'll just say that. Interesting point here. Notice this price gap. This is the daily. This is a futures contract on SGX. I'm not exactly sure what that is. That's Singapore. But notice, and anybody that's been working with Brian for a while knows this, but gee whiz, look at that. Nice, juicy price gap. That should be filled in with a candle body. So my hunch is that, seeing this precipitous sell-off, huge rally, might even argue the close on this candle here, 31,000 even. We opened up here 30,980. So actually not quite harami. Baby's body slightly outside of mummy's yaya. but definitely an inside bar. And probably a short-term pivot for price there. It wouldn't surprise me. Uh, all right. So, long and short of it here, when I sort of got up and I sort of like, brushed the cobwebs off, trying to figure out what the heck's going on in the world, I think this is the primary driver. Because when we actually look at the econs for today, you can't really make the argument that econs are driving the price action here today. What I've seen here today, basically non-event econ wise. Um, we had oil inventories. It's interesting that we have seen a drawdown in oil inventories repeatedly. It's also, this is about I think they said something like 7 weeks in a row that there's been drawdowns in the oil inventories. Um, is this a function of the politics and the people that are in charge right now down in the States trying to flood the market with as much oil as possible from strategic reserves and stuff? And then with Mr. Biden sort of bowing out here, is all that in flux? I'm not quite sure. What I would just simply say is that's about it for econs. And we actually had a build in unleaded gasoline supplies, which is interesting in itself because we are in the summer driving season. So is this a commentary on the consumer and the amount of activity that they're doing out in society, and the staycation versus summer vacations? Did notice, I go through a very sort of structured routine when I want to try and figure out what the hell's going on in the market. And pulled up sort of the daily crude chart. And I mean, it's been a precipitous slide, but are we basically done with the slide? You'll notice that if we actually zoom out and we look at this is the original price channel for this September crude oil contract. Interesting how the market's really respecting that trend line. So our old adage, of course, is that we don't really ever want to short markets that tag uptrend lines, like, or even break through that. That trade going short there is actually extremely dangerous. And you can see how the market sort of oscillated around here. We're also into a number of different technical objectives. My old sort of boss over there at Top Step a million years ago, good old Johnny Hoagland, went into one of his levels. We got a couple A, B, C, Ds, and horizontal support and resistance. Oh, what a surprise. Let's throw a Foggenbaum in there. So I don't know whether we're done with this level, and we didn't actually trade down to a lot of these levels yet. So there probably is going to be some back and forth. You can see how we're banging into moving average resistance here just in the short term. So my hunch here is that the bounce that you're seeing, whether it be in the stock market, whether it be in the commodities markets, I think a lot of it had to do just simply with that very intense action over there in Japan. And really, what does this come back to? And that is the Japanese yen. Actually, probably the best place to show you this would be over here, and you can see the yen is settling down a bit here. Did have a fairly precipitous move up, but I don't know whether we're done. All right. There is Mountain Man. This is the reload short zone. Still think that this is nothing more than dead cat bounce. We would actually have to go and break these highs here and close above there, and then we'll start setting up, Mr. ICT's fund setups. So at present, I'm still thinking that this is nothing more than dead cat bounce. Probably the market was a little bit too oversold. It's interesting how we did bang into a 2.618 here. Hopefully it worked long enough with me to respect those Foggenbaum levels. And, I mean, hell, if this thing really gets going, you can see the top of that Foggenbaum studies all the way up there. I don't think we're going to get up there. I think what happens is we probably run into some serious resistance against these highs here. And then on the action, maybe this is the extent of the rally. And now we're saying the Bank of Japan's coming out and saying, whoa, 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 you know what? No, 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 we're not doing that. We're not doing that. Because clearly this move here caught a lot of people off guard. As I said there a second ago, I think what's happened here is that this market was just way oversold. And if anything, it was vulnerable. Actually, the Top Step platform, the prop firm, they have a thing that they call the tilt, which is, it's funny, like 10, 15 years ago, I knew why Nebraska created that Top Step place. And it turns out that I was 100% right the whole damn time. But they have this thing called the tilt, and he used to always talk about how he used to always like to gauge the sort of the longness or shortness of the pit, and as everybody caught long, and if you can get the market to move the other direction with everybody long, man, those turn into monster trades. I think that's exactly what this was. Is everybody and their brother was short. This market was ridiculously oversold, so it was susceptible to some sort of insane dead cat bounce like this. And that, I think, is exactly what's happened here. So we don't really have a new trend higher here. And now that the Bank of Japan's come out and said, no, 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 we were joking, we were joking. I think you actually might find that this thing tops out and we start working our way back down again. So anyway, we'll see what happens. I think that is the major driving force in the market right now. And also keep in mind too, middle of August, summer doldrums. Where are all the professionals right now? They're off in the Hamptons, and really this market is susceptible to this kind of stuff. So that's my sort of my input with regard to the yen and what's really driving the market here in the short term. Guess finish off conversation. As I said, seeing a little bit of weakness coming back into the market. We'll see how this plays out. I don't necessarily have any sort of, horrendous, oh my God, this is breaking down right now. Did notice gold and the silver kind of waffling a little bit. And if anything, their rallies of late might be tempered if we actually see that crude oil market start to firm back up. So interestingly enough, from a crypto perspective, I think Donnie came out and he said, we've got tremendous news, incredible news. This is going to be the most incredible thing ever, right? Blah blah blah. And really, it doesn't really amount to a hill of beans. I think that the crypto market was catching a bit of a bid because Donnie was sort of mentioning that, and correct me if I'm wrong. I think Chris actually had this tapped correctly. It's like something about his son or something like that. I don't know whether Chris is here or not.
Yeah, from what I understand, it was basically an announcement of an announcement from both the sons. Big news, quote unquote, in crypto is coming. That's the
All
last that I
right.
saw.
I don't know whether this is going to help the market or not. If we look at the total market cap, we can kind of see that this was a new low. And V bottoms, V tops need to be tested. All we did was that dead cat bounce kind of thing. This is often dangerous because once the sort of momentum exhausts itself, now we actually start getting some structural tops coming in here. We are now breaking previous bullish structure. That's sort of the Mr. ICT's kind of concept there. This thing now actually has the green light that if it wants to roll over, it can. And I think that a big part of the dump last week, I think, was into options expiry, which they love to do in this space. But I'd also say too that sort of the dead cat bounce reaction out of that. Well, it turns out the Japanese were just screwing with us here, and it's not that big of a deal. Business as usual. You might find that these things settle back down here. Has anything changed here with regard to this space? I've been showing you this fun little sim trade here demonstration. Still think that we're just working. This is our playground. And as you saw yesterday, I sort of pointed out, I wouldn't be surprised if we rally back right up against these downtrend lines. And this was such a huge move that, probably like dead cat bounce. Interesting thing though is that dead cat didn't bounce a hell of a lot, did it? And I wouldn't be surprised if this thing kind of peters out that we just sort of bump our way along that trend line there. So there's nothing really to do here. And what I've been counseling people of late And you just have to understand this. If you're part of the market, this is a trader's life. You just got to get used to it. If you so choose this vocation, remember, 80-90% of the public cannot play this game. They are way too impatient and they start losing interest, when markets basically, and this is the tragedy of this, of course, is that we basically topped out very cliche about a month or so ahead of the halving event. And we're just going through the consolidation process, trying to clean up all these overbought conditions. If RSI ever goes overbought on a weekly basis, just cool your jets. It's just, and especially, I built this specific indicator, the Willie, to try and keep me honest whenever he goes overbought. Our best bet is just to cool our jets. So it's not really like Bitcoin's a sell here. It's just that it's just not ready to be a buy yet. Having said that, you can see that all these indicators are slowly going through the process of cleaning themselves up. So, we did have MACD go to try, test these lows, but not go to new lows, but price did. That might actually go into bullish divergence in the next week or two. Still think Willie needs probably, and it wouldn't surprise me that the pivot actually comes through our big eclipse event coming up here. So I wouldn't be surprised if this has to go back and forth. And you notice, when the W's start coming back in, that's when we can start getting excited again. So I don't think there's a huge hurry here. And what I've basically been suggesting to people, which isn't really a lot of fun, but there's no way that you're going to have like the altcoin market, poop coin market, all that kind of stuff moving higher without these guys at least looking firm. So we just have to sit and wait for these things to firm up and to start looking bullish again, painting W's, etc. And then we can start anticipating big bull runs here. And as I've said repeatedly, I mean, it's interesting that Donnie here is going to try and juice the market with some sort of news event of a potential news event. I'm not quite sure how that's going to go. But my hunch here is that we got to get through this election. We got to get through this huge eclipse event coming up. And it was interesting last night in our meeting, and we'll carry this on in the after party. Turns out that the eclipse event that we've come to respect so much. Remember, this was the eclipse event over here that stopped the bull. Turns out this eclipse event comes in on that much anticipated FOMC meeting in September, where everybody and their brother is expecting the Fed to lower rates. I mean, that would be ironic if they actually didn't, but I think it's pretty much baked in that they're going to in September. So, do we get that ultimate bottom that comes in the market through that window? We're just going to have to get through that and see what the price action gives us through that event. And I don't think there's going to be a huge hurry here for the next month or two in the market. Finish off with just a quick boo at the broader crypto market. This is the total market cap minus Bitcoin and Ethereum. AB equals CDs. We did actually trade down to a technical objective here. So I think you can make the argument that, we are going through this correction process. I mean, this is a pretty substantial pullback off of these highs, right? We did tag Mountain Man there. And usually Mountain gets a bit of a play here in the market. And as I said there a second ago, we did tag the AB equals CD. So this is also probably a really good example where we're probably much, much closer to the bottom than we are the top, right? The top now is way up here. The bottom, once we get into reload zones, you've heard me bark repeatedly about 78.6s, Wyckoff checks, trend line checks. Everything here seems, fog and bombs. I wouldn't be surprised if our bottom ultimately is somewhere down in, green boxes. This is what we teach you at the education program at TRI. It wouldn't surprise me if we're somewhere in here is our bottom. To be bullish, we're going to have to get on the other side of this trend line and start putting in structure to work our way back up against this trend line. So again, there's not a hell of a lot to be like overly bullish about right now. But at the same time, too, I think this is the perfect opportunity to start going out there and kicking the tires and figuring out what fundamental stories you like, and where do you want to have your money working when we go into this crazy 2025 2026 blow off top. That would be just business as usual in crypto. TRI has a fundamentally vetted portfolio of names, and actually, Stuart's been busy adding a couple more. So we're going to have to try and figure out where we can sneak in a couple more symbols on this. Little old ladies, you should be just out there nibbling away. Don't spend all your money in one go, though, right? The whole point of nanny nibbles, our level one instructors, awesome sort of application of that little old lady risk management technique. It's beautiful. I mean, it's poetry in motion. Just, if you don't want to have to be worried about getting stopped out of positions, well, just go in and buy little 0.5%, 1% of your stake. And you can do that over a period of 4 or 5 months and just slowly accumulate positions. Nothing wrong with that at all. So that's probably the market state that we're in right now. All you nannies should be nibbling, and you should be doing your homework now when the public is not interested. What are the good quality names that should do well? If we actually get into that sort of what is it called, real world assets, sort of. I think even Donnie even mentioned something about he was wrapping his arms around DeFi and all that in that announcement coming up, right? So really do your research, and of course, I won't go into it here. I think we'll probably leave the free broadcast at that for today. But hopefully you get an idea of what I'm seeing in the marketplace, what we're looking at around TRI. And unfortunately, it's not the most bullish commentary here on the spec market right at the moment. But I think it's probably in your best interest that I don't blow smoke up your butt and just tell you just go buy something you're guaranteed to make money. Because frankly speaking, I know for certain, and I know from life experience, that that's not the way this game is played. So with all that said, let's head on over to the after party and have some fun chit-chatting a little bit about some of the fun studies that we were picking apart in our stock pickers club last night. Hint, hint, hint. DC annual reports are looking for a pivot here. So if you are going to be doing some shopping, there was a couple names, including that Intel we've been talking about recently, but there is one name in particular I've got to go in and buy it today. I'm not going to tell you what it is, but I definitely want to have that position put on here. If we're actually really going to pivot here and get ready for some crazy ass counter trend rally. And the irony of it all is, as I said there earlier, with all these damn gaps all over the place on this price chart, the price could easily work its way right back up top. And it'd be like a week from now, there was a bear market. I don't remember there being a bear market. Well, we're all bullish. Blah, blah, blah. Okay, so have yourselves a great day, PMA for the win. Today is Wednesday, so I guess you'll have a whack at Julian tomorrow. And I guess I'll see you one more time before I head out on vacation here on Friday. So if you want to carry on the conversation, come on over to the after party. And we'll do some a little bit more advanced review of what we talked about briefly here today. All right, have yourselves a great day. All the best, and bye for now.